Hello, from LPL Financial. Welcome to The Talking Point. I'm your host, Quincy Krosby.
Good morning, everyone. This is Quincy Krosby. It's The Talking Point. It's Monday. It's September 11th. The market this week is completely focused on inflation. The market wants to ascertain whether or not the Federal Reserve is close enough to achieving its goal of reaching 2% inflation at a reasonable pace. Now, in other words, the market doesn't expect, nor does the Fed expect, that they will be at 2% this week or next week or whatever, but that the untangling of core inflation, the stickiness that we talk about, whether or not that is unwinding at a faster clip. That's what the market is focused on. It's what the Fed is focused on. Now, the Fed has a meeting on September 20th. We do not expect that the Fed is going to raise rates at that meeting. They've made it fairly clear that they will wait, they will watch the markets, they will watch the data coming in, that they are data dependent. So the other thing is that the Fed goes into the blackout period before September 20th. And therefore, if we haven't heard anything for them to change their minds, the market is situated that the Fed is on pause at that meeting. So right now, all eyes, of course, are November and December, the meetings, to whether or not the Fed will raise rates. So this is why this week is extremely important, because then what will happen is that the probability that we all talk about, we hear us talking about the Fed funds futures market, all that is about probability of what the Fed is going to do next. And that will also, after this week, that will also adjust accordingly. And so, again, Wednesday is the consumer price index, and then will be followed by the producer price index. What we're seeing is an economy that is resilient, an economy that continues to look at consumer spending, even though the data that have come in, the data has shown that consumer spending continues higher. However, personal income has come down a bit. So, to continue consumer spending, we need two things. We need to see that job growth is still solid, that folks are not being fired left and right, losing jobs, because if that were to hit the headlines, consumer spending typically, historically, starts to tighten and become even more deliberate than it is now. It is deliberate, meaning we're being much more careful in our spending. We're still spending, but according to all of the reports, we are being more careful. When there are headlines regarding layoffs, you see historically that we, the consumer, we start to say, hey, maybe I'm next. Maybe we should hold back, particularly on big ticket items. So a lot is riding on this week, and you can understand because all of the talk has been about inflation, and when is the Fed finished. Also this week, we'll see the European Central Bank, the ECB, and what they are doing. Right now, it's 50-50 in terms of whether or not they get a rate hike, but we are starting to see there, too, questions as to whether or not they can pause and wait to see the data. And the reason for this is the Eurozone is slowing in terms of economic growth, and the question is whether or not the ECB, and remember, it's different than the Federal Reserve. It is what we call a rules-based, that's R-U-L-E-S, rules-based central bank, meaning they have only one mandate, and that is to bring inflation to a level that is consistent with price stability. That's 2%. And so the question is whether or not they will pause at this meeting, and if they do, it will be what we call a hawkish pause. In other words, making it clear they're not finished, they're just watching the data. Or if they do go ahead and raise rates, perhaps it will also be a bit on the dovish side, where they would say, well, we're raising rates, we understand that we're seeing slower economic growth, but we need to bring back price stability. In other words, telling the market that they understand that their economy, the underpinning for their economy, is slowing, but inflation still remains high. So, in other words, there's a lot going on here. There's a lot going on, all over the world. But we're focused this week in terms of inflation and what it does to the treasury market. Because as everyone knows who's been following the equity market, everyone talks about where is that 10-year treasury yield? Is it climbing higher? And that's something that the market does not want to see. It has been fairly steady, actually, in the range where you see it right now this morning. And we'll see what happens when the inflation report comes out on Wednesday. Also, all eyes are on energy and the price at the pump. The fact is that all prices are climbing higher, and the question then becomes, at what point do consumers say, whoa, I need to hold back on my spending? Now, this is interesting because we talk about jobs market, right? That really is so integral to how the consumer feels and feels about the future and feels about spending. But gasoline prices also matter. Why? Because as everyone knows, when we go to fill up and it's more than we expect, suddenly we say, wait a minute, I may not have as much money for what we call discretionary spending, things that I want but I don't actually need. And therefore, all eyes are on the pump, the gasoline prices. And the question is, do we see a march higher to $4 a gallon across the country? Now, I know in many parts of the country, in Oregon, state of Washington, California, gasoline prices are already very high. But I'm talking about across the country on a sort of average basis. We'll keep our eyes on that and see the relationship between that and the consumer discretionary sector. If folks start saying, whoa, this is getting too high, and again, Americans are going to be a lot more careful about spending. So overall, the other aspect of higher gasoline prices, as everyone knows, is that along with food prices, it makes the part of the inflation story, the part that supposedly the Fed doesn't pay attention to, but of course it does, climb higher. We'll get a look at that, obviously, on Wednesday with the Consumer Price Index, because we've seen that food prices are climbing higher along with gasoline prices. And then the question is, and this gets a little geeky, so get ready for this, the question then becomes, how do consumers in the U.S. view future inflation? Do we see that it is climbing higher? Because we know, again, historically, statistically, that consumers, when food prices continue to climb higher, along with gasoline prices, see future inflation climbing higher. That is something the Fed does not want to see. So please keep that in mind, too. In any case, it's going to be a week chock full of other data. We also have data coming in from China. Now, just to go back to last week, I want to point out that you probably saw where Apple shares got hit. Now, Apple is important because it's in so many indexes, right? It's heavy. The weighting is heavy. So without talking about the price in particular, I want to mention what happened. Why did that share price get hit and then recover a bit on Friday? It is because the authorities in China said that, guess what? In our offices, official offices, we are banning iPhones. We're banning iPhones. You can't use them. The question then hit the market. And by the way, it wasn't as if it was just that ban was announced last week. It was just that it was reported in the Western press last week. And so, obviously, Apple is extremely popular there. But the question was, how deep is this going to go? What more are they going to do? Now, keep in mind, Apple employs thousands and thousands and thousands of people in China. And through their subcontractors, thousands and thousands of people. The number I've seen is above millions of people in China. And why is this important? Because China has unemployment climbing, and in the unemployment picture, a good portion of them are young people. That's something you don't want to see. So why would they jeopardize Apple's position in China? That's a big question right now, right? Also, at the same time, a Chinese iPhone, or smartphone, let me call it smartphone rather, has been introduced through Huawei. I'm not going to spell it because if you go back to 2019, Huawei was in the news every single day, where their presence in the telecom services, their presence in global telecom infrastructure was questioned as to whether or not it was a spying agency for China. And therefore, it was, in essence, blacklisted by the U.S. and many other countries. It allowed Apple to really to proliferate because Huawei supply chain was in essence broken. So now they have come back with a smartphone of their own, and the question is, does that become a counter to Apple's presence in its number one status of what kind of smartphone the Chinese want? So we're keeping our eye on that. I expect to see more headlines in the U.S. and in China as well about this. So it's not just Apple, but also about Huawei. I'll give you a hint here. It starts with an H. So if you're looking it up, just remember it starts with an H, but go back to 2019. It was in the news every single day. Now, Apple has a big display this week. It's a big event for the company, and obviously all eyes will be on that and whether or not the share price is affected. But the reason we pay such close attention to Apple is it's weighting in markets, including, in the Dow and seemingly every other sector. So we want to see how that share price does this week. Also this week, we are going to be paying very close attention, as I said, to the European Central Bank and to the data releases here in the U.S., but particularly inflation. So we'll keep our eyes on that. If I had to say one thing about this week, it is obviously inflation. There are many other reports coming out, but you will hear all the talk about it will be about inflation. So with that said, have a very good week. We'll keep our eyes on the market, as always, not just overseas, but here in the United States. And the big question will be, is the Federal Reserve closer to reaching its goal of 2% inflation, which equals price stability? No one expects it, by the way. No one expects that it's hitting that level now. It is the path towards 2%, the trajectory towards 2%, and how fast is it moving there. That's what the market is focused on. So you're going to see a lot of talk leading up to Wednesday, inflation. But that's what this week is all about. Thank you so very much. Have a good week. We'll be back next week.
This material was prepared by LPL Financial. It's for general information only and is not intended to provide specific advice or recommendations for any individual. There is no assurance that the views or strategies discussed are suitable for all investors or will yield positive outcomes. Investing involves risks, including possible loss of principal. Any economic forecast set forth in the podcast may not develop as predicted and are subject to change. References to markets, asset classes, and sectors are generally regarding the corresponding market index. All indexes are unmanaged and cannot be invested into directly. Index performance is not indicative of the performance of any investment and do not reflect fees, expenses, or sales charges. All performance reference is historical and is no guarantee of future results. All information referenced in the podcast is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. Securities and advisory services offered through LPL Financial, a registered investment advisor and broker-dealer, member FINRA and SIPC. Insurance products are offered through LPL or its licensed affiliates. To the extent you are receiving investment advice from a separately registered independent investment advisor that is not an LPL affiliate, please note LPL makes no representation with respect to such entity. If your financial professional is located at a bank or credit union, please note that the bank or credit union is not registered as a broker-dealer or investment advisor. Registered representatives of LPL may also be employees of the bank or credit union. These products and services are being offered through LPL or its affiliates, which are separate entities from and not affiliates of the bank or credit union. Securities and insurance offered through LPL or its affiliates are not insured by the FDIC or NCUA or any other government agency, not bank or credit union guaranteed, not bank or credit union deposits or obligations, and may lose value.